Hi everyone, so today we do a stock analysis on NVIDIA, ticker NVDA. It's an American multinational corporation and technology company. Let's get started. Quick disclaimer, I'm not a financial advisor, this is my own research, up to you to make your own decision. So here is the summary. So we're going to start with a company profile, then we'll look at the fundamental analysis including insider ownership. We will do a quick technical analysis and then price catalyst. We think it's crypto or AI. We will explain a bit later, and then we finish with a conclusion to figure out whether the company is interesting or not. So NVIDIA was incorporated on April 5, 1993 by Jensen Huang, which is still the CEO of the company to this day. That's over 30 years, so that's pretty good. And he was an electrical engineer. Then NVIDIA provides graphic and compute and networking solution in the United States and globally. And the key of the companies that is introduced and innovated the graphic processing unit, GPU, and that you can pretty much find it in any computer to this day. So the main part, the one that brings the most revenue in the company is the compute and networking segment, and it's including AI, so artificial intelligence. And so it's pretty much data center computing platforms and end-to-end networking platforms. So on the top right you can see all the rooms with all the computers. That's pretty much what data center looks like. And then the robotics part of it, so Jetson robotic, for example, I give you one. So yeah, it includes quantum for InfiniBand and Spectrum for internet, NVIDIA Drive automated driving platform, Jetson robotic, NVIDIA AI, and DGX cloud software and services. So I won't go through it, just very briefly, but it's pretty much for gaming, visualization, data center, and automotive market. So the second most important segment is the graphics segment, which is the one that get the second most revenues. And so NVIDIA design and sell GPUs for gaming, cryptocurrency mining, and professional application, and it sells chip as well for vehicle, robotics, and more. So it's include like GeForce, so you've all seen like all these graphic cards for video game, the one for enterprise as well, similar, and then after all the virtual GPUs for cloud computing, and then all the automotive platform and entertainment, and then the Omniverse software, so anything to do with metaverse and 3D internet application. So in this page you can see the annual report summary for 2024. The thing to note is that the revenue is totaling 60.9, which is 126% year-on-year growth, and then the operating income is 33 billion, which is 700 year-on-year growth. It's amazing. I mean, those numbers are literally amazing. And what's interesting is compute and networking is represent nearly 80%, I should say, 47.4 billion, and then like 13 billion for graphics. So as you can notice, this graphics one is actually smaller than the compute and networking. And the data center, it's pretty much where all the income come from in that compute and networking, if I understand that one right. And then the gaming, I mean, all the other things like visualization and automotive is very small. So I couldn't really find anything about the customers of NVIDIA, and I wanted to search a bit further and found a great article. And he was saying that there were apparently 3 NVIDIA customers that were 30% of the revenue. And after looking at it, they were saying that each of them have approximately 12% of quarterly revenue. So they actually spend a lot too NVIDIA, and those companies we couldn't figure out who they were, but they were guessing that it was Google, Amazon, Meta, Microsoft, and Tesla potentially. So that's something to consider, is that those are all company in tech, and that's interesting that they all are customers of NVIDIA, which is logical in a way, but also in my opinion a little bit concerning. So I found another diagram as well, a little table, sorry, that was explaining pretty much similar kind of result, 15%, 13, but I don't know if this is reliable, but it's quite similar to what the article was saying. So let's go to the fundamental analysis. So these are the ratios, like and I would say that like the market cap of 3 trillion, it's actually a little shocking to me. It's so huge. Trailing P of growth company like this 42, I mean, like that's quite high, but at the same time the growth is so huge that you can understand why it's a bit high like this. Obviously, like compared to all the value that I look at, 23, 38 for the price to sell and price to book, and like enterprise value to EBITDA 35. I mean, all of these numbers are definitely overvalued for my type of research in value investing, but I thought like it's interesting to see because this company seems to be growing a lot. So we're going to see in the next slide, and I quite understand why those numbers are high too. I won't spend too much time on this one, but I wanted to just show the return on asset and equity, 57 and 120%. That's really huge. Then like all the income looks amazing, and then like the cash as well, there's no debt. I mean, like this is the dream kind of financial statement you can see in terms of picking a company. And then the like percent of insider is 4.5%. Honestly, it's much higher than I expected. And then 67 institution. I'm not surprised. Let's get a bit more detail in the next slide. So in this slide, instead of showing you the whole numbers in the balance sheet, I wanted to actually show you a quick chart. So in this chart, you can see that the total assets went from 44 to 111, and then like liability grew as well, but slower, and then the equity grew much faster. So this is exactly what you want to see, like that, and then equity much larger here than liabilities. And then you can see in the balance sheet on the right, like the equity, it's mainly 2/3, let's say, of equity, and then 1/3 of liability. Always a good sign. So here is another chart that I made. So it shows the revenues and net income of the past 4 years. And same, I mean, like you can see the growth has been amazing, going from 26 billion to 130 billion of revenue, and net income from 9 billion to 72. I mean, who would have not dreamed of anything better than that? Nothing to even complain about. Amazing growth. If you want to go in a little bit more detail, you can see the cash flow, like that has been growing quite a lot, and then the capital expenditure in orange haven't really done much apart from staying low and not growing as fast as free cash flow. It's always really nice to see that as well, and nothing to add. Amazing. So here is another chart that shows the share issued in the past 4 years. So you can see it's been declining. So I would say usually it's a good news and a great thing. The only concern is because we've seen the company is overvalued and they're paying back the shares, so they're buying back shares to reduce the number of shares. And I would say that because it's overvalued, it's probably not the best time to buy it back. But at the same time, if they're growing at 100 or 200% a year, maybe they're making the right choice. It's hard to tell, but I personally think they shouldn't even care to reduce their shares, in my opinion, the way they're growing. So in this page, which come from Guru Focus, I wanted to show you guys the insider trading. So all the pretty much insiders that have been buying and selling, and you can see that they have only been buying in 2000 something. I don't know if it was like 3 or 4, but a long time ago. And then they've been like pretty much selling all the way from 2007 to today. And big spike was 2007 and 8, I guess. And then the last massive spike was in 2023, 2024. So to me, it shows that that they're selling way more than they did. So they might see a little more top, but considering they own only already 4.5%, maybe it's not that concerning. So I'm not too sure, but I would say still something to consider. Why are they selling a lot now? Do they think the company won't grow anymore or not? Hard to tell, but always something to consider. So let's go to the technical analysis. And I mean, like when you see that chart on 1 month from 2000 to today, I mean, it's completely amazing. I think it in the last just less than 10 years probably went already 140 times. That's amazing. Short term, I would say there is a little bit of weakness, as you can see in there, but nothing crazy. They haven't really broke that way, so it's just something to say that it might be consolidating, who knows, to create another uptrend or start to slow down and revert. I have no idea, to be honest. I mean, mixed, because they're growing so fast. If they continue to grow this way, I really don't see how they would really go down that much. But something to consider in case the world slow down and NVIDIA doesn't have as many customers, or their customers don't grow as quickly. So unlike commodities, which is super easy to figure out where the price of the commodity is and how the company will react to the price, in this case I would say it's a little bit harder, but I could say that the internet companies are the catalyst of NVIDIA. In my opinion, if the internet companies would do amazing, like mainly Meta, Google, Amazon and Microsoft, then I would say that NVIDIA will follow and continue to grow potentially at that speed. In my opinion, if those companies, the tech companies, start to slow down and they like start to not grow or like go backward a little bit, that could definitely impact NVIDIA. So I'd say that might be the catalyst, the other tech companies. And then crypto and AI could be, but it seems to me that maybe AI because of data centers. Crypto, I'm really not sure, but I truly think AI could be more impacting the company because the data center are 80% of the revenue, and I think that would make sense. But most of those companies anyway are actually all using AI at the moment, so to me it's related. So now I'm gonna tell a little bit of a negative thing about the company, because like the company is so, in my opinion, big. It's over $3 trillion, and I would say that this is quite huge. But the thing concerning me the most, and that doesn't stop from growing. I have no idea. It could literally grow and like do 300 times. So I'm not trying to be pessimistic in here, because so far there is nothing to even be pessimistic about. But when you look at this, it's quite concerning though, because Apple, NVIDIA, Microsoft, Amazon, Google, Meta, Tesla, they all the top 7 companies that are over $1 trillion. I mean, honestly, it's crazy, amazingly huge. And then those companies, they all pretty much clients of NVIDIA, directly or indirectly. I mean, even like Apple, I've seen in the past, they've been using NVIDIA cards, maybe not recently, but who knows if they will. So all of these are pretty much clients of NVIDIA. So if NVIDIA, like if all these other companies start to slow down, I mean, like for sure NVIDIA will be impacted. And the second thing that is super important is that the top 10% US stocks reflect to 75 of US equity market. This is to me huge. Like apparently it's since the Great Depression of 1930s that we haven't seen this, and like even like 2000 was at 73. So yeah, I can't say like, you know, truly that it's a bad company or anything. It has revenues, it has income, it's growing fast, which is great, but we have to be concerned as well is how much can it grow further. And I think that honestly we can't grow and do 5x from today in the next year unless we are completely overvalued. I really don't see how NVIDIA could continue to grow. That's my main concern. So maybe I'm a bit of a negative in there because it's been doing so great that I'm actually shocked myself because I haven't really looked. And then yeah, it is an interesting story, and we would see if the internet stocks continue to perform that well or not. But like this is definitely, I mean, like I wouldn't want to start as a value investor to buy now, that's for sure. It would be more of an exit time for me as a value investor. That would be the best for sure, but I haven't bought earlier, so I'm just a spectator. As a conclusion, I would say that NVIDIA is an amazing company. It's growing very fast, and over the past few years it's been scaling like at really rapid pace. The CEO is still running the company after 30 years. All of that I really like. I mean, nothing to complain about. For me, the risk that I'm concerned about are more about the continuation of that success. So can the company continue to grow in the next few years and do 5x, 10x, considering the size of the company, how big it is already, and how much the other tech companies are like not overvalued, but they're so huge. And then so unless we see like even bigger earnings, like something like 100 billion or more, maybe I would say the company might be interesting. But if it doesn't actually get to that stage, at the moment it is like 30 or 40 P ratio is quite huge. So if it doesn't actually double or triple, I think they would be concerned. And the last bit is the biggest clients. They're all tech companies, and yeah, depending on their performance, NVIDIA would follow. That's for sure. That's how I see it. So that's it for today. I hope you guys liked the video. It was a little different format because it's more on tech and not as much on pure value, but I thought it was very good to have a look at it, and actually much more interesting than I expected. Thanks. See you in the next video.